What is the MACD technical indicator? How effective is it when used as part of a trading strategy? I have experimented with hundreds of different technical indicators before learning which ones work the best, and I'm going to share my findings with you. Welcome to this episode of Ahead of the Trade. The goal of this channel is not to sell you any paid course, it is to help you develop a deeper understanding of many different technical indicators and to show you exactly how to apply them in real trading strategies to help you discover your trading edge. Today we are going to be exploring the MACD technical indicator. We're going to discuss what it is and the best settings for you to use. We'll explain how the MACD works and how to interpret the information that it conveys. We're going to explore the most effective ways to use the MACD indicator within a trading strategy and go through some examples together. Later in this video, we'll dive into some of the common mistakes beginner traders make when using the MACD and how they can be avoided. The Moving Average Convergence Divergence Technical Indicator, commonly known as the MACD, was created in the late 1970s by technical analyst Gerald Appel. It is a trend-following momentum type of indicator that visually conveys the relationship between two different moving averages of price. It can be used to reveal changes in strength, direction, and momentum of price. It is used by traders all around the world in many different trading markets and across multiple different timeframes. The MACD is a lagging technical indicator. I like to use lagging indicators for confirmation of entry signals that I have received elsewhere, like from price action or from other indicators, such as the stochastic, which I've explained in a previous video. Personally, I do not use the MACD on its own to generate buy and sell signals. We will come back to this point shortly. The MACD is made up of three elements which move above and below the baseline of the indicator. This is what it looks like on a chart. This line is called the MACD line. It is generated by plotting the difference between the 12-period exponential moving average and the 26-period exponential moving average of price. This is called the signal line. It is a 9-period exponential moving average of the MACD line. This is called the histogram. It visually represents the difference between the MACD line and the signal line. In my own experience using the MACD indicator, I've found that the best settings to use are generally the default settings. The default settings for the MACD on most technical analysis charting platforms are 12 for the fast EMA, 26 for the slow EMA, and 9 for the signal line, also referred to as smoothing. I have experimented with many different settings for the MACD, but I have always found myself returning to the default settings as they are very effective and quite reliable across all timeframes. The MACD conveys to us whether price is currently trending higher or lower and the momentum with which price is trending. If the MACD line is above the signal line, the histogram is positive, which means it is growing in an upward direction from the baseline. The size of the histogram bars indicate the strength of the momentum. If the current bar of the histogram is larger than the previous bar, this tells us that the momentum of the trend is increasing. Alternatively, when the MACD line is below the signal line, the histogram is negative, which means it is growing downward from the baseline. The negative histogram indicates price is currently trending lower, and the size of the bars of the histogram will represent the current strength of the bearish momentum. When using the MACD in a trading scenario, we want to note whether the MACD line is above or below the signal line, whether both lines are above or below the baseline, and whether the histogram is showing current momentum increasing or decreasing in strength. There are many different ways that traders will interpret the information that the MACD indicator displays. It can have multiple different uses depending on your own style of trading. The MACD and signal line can be used to determine whether momentum of a price trend is increasing or decreasing. Momentum is decreasing when the two lines are converging or moving toward each other, and increasing when the lines are diverging, moving further apart. This momentum is displayed on the histogram in the form of a bar graph. If the histogram bars are positive, growing upward from the baseline, the momentum of price is bullish. Whereas if the histogram bars are negative, growing downward from the baseline, the momentum of price is bearish. Furthermore, if each consecutive bar of the histogram is growing further away from the baseline than the previous bar, this is a visual representation of momentum building. Strong momentum shown on the histogram represents an imbalance of pressure between the buyers and the sellers. When consecutive bars of the histogram are getting smaller than the previous ones, momentum is contracting and balance is being restored. This could be viewed as a sign of an impending reversal of price. Some traders like to use MACD and signal line crossovers as signals to buy or to sell. The MACD line crossing above the signal line may be interpreted as a signal to buy, whereas the MACD line crossing below the signal line may be interpreted as a signal to sell. Another way to interpret signals from the MACD is to wait for the histogram to change from negative to positive, known as a bullish crossover, as a signal to buy. And from positive to negative, a bearish crossover, as a signal to sell. However, as I mentioned previously, this is not how I personally use the MACD, because it is a lagging indicator, and these signals often come too late when the risk-to-reward opportunity is no longer favorable. The way I like to use the MACD for my own style of trading, and how I have found it to be most effective, is to use it as a tool to build conviction by confirming signals and biases that I have received from other technical indicators. One of the ways that I do this is by examining what the MACD is telling me on a higher timeframe. If the MACD line is above and currently diverging from the signal line on a higher timeframe, this gives me bias to look for buying opportunities. If the MACD line on the higher timeframe is below the signal line, this gives me bias to look for opportunities to sell to enter my position. Furthermore, I use the MACD to alert me to potential moves in price that are still yet to happen, which I can look to confirm with corresponding price action and other indicators. For example, when I see the MACD histogram showing strong momentum and price has made a large move into resistance, I am more likely to expect a reversal because the strong momentum move has already happened and is far less likely to be sustained. On the contrary, when the MACD histogram begins to build bullish momentum after a period of extended consolidation, whilst price is also consolidating below a resistance level, this signals to me that a potential breakout may be more likely to occur. Let's go through an example of each of these scenarios to show you what I mean. Here, we have the daily chart of the stock price for Advanced Micro Devices Incorporated, ticker code AMD, on the Nasdaq exchange. As you can see, back in February of 2020, price has found resistance at around $59. After experiencing a sell-off coinciding with the historical COVID events of 2020, price had rebounded and was ready to retest this resistance level about a month later. When looking closely at the MACD histogram, we can see that price had been moving with quite strong bullish momentum for an extended period of time coming into this resistance level. As I mentioned previously, this is actually indicative of a reversal because the large momentum move had already occurred. Price failed to break this level, as the MACD suggested, and evidently made its way back down to below $50. Fast forward to mid-July and you can see that AMD had been consolidating within this range between roughly $48 and $59 for a period of around 3 months. Throughout this consolidation, the momentum shown on the MACD histogram is quite low. If you look closely, as price has approached the resistance level at the top of the range multiple times during this consolidation period, the MACD has shown either a bearish momentum or a very low bullish momentum. What is different this time? As price approaches the resistance level once more in mid-July. Looking at the MACD indicator, we can see that the MACD line is above the signal line and the bars of the histogram are beginning to build in size with bullish momentum. This signals to us that a breakout is more likely to occur in this scenario than in the previous attempts made by price at breaking through the resistance level. This particular scenario resulted with a very powerful breakout. Now that we have an idea of how the MACD can be used to aid our decision-making within a trading scenario, let's discuss some of the common mistakes that beginner and some intermediate traders make when using the MACD and how they can be avoided. 1. Using the lagging crossover signals to dictate their trade entries and exits. And 2. Interpreting strong momentum shown on the histogram as a signal to enter a trade. Although these don't necessarily seem like mistakes, it is often the case that by the time the MACD displays these signals, the majority of the move is already over and the risk-to-reward opportunity presented is no longer in our favor. We can avoid these mistakes by instead using the MACD as confirmation of price action and other technical indicator signals to build higher levels of conviction about a particular trade. In conclusion, the MACD is an extremely useful technical indicator, but we want to make sure that we are using it in the most effective ways. Which, in my opinion, is to confirm signals that we receive elsewhere instead of basing our trades off the entry and exit signals of the MACD itself. My favorite indicators to pair the MACD with are the stochastic or the Bollinger Bands technical indicators, which we have discussed in previous videos. If you have any other MACD or technical analysis questions, feel free to join our community Discord. I have posted a link below. If you found this video to be helpful, consider giving it a thumbs up and subscribing. Let us know in the comments what strategy or indicator you want us to explore next. See you next time on Ahead of the Trade.